Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Wednesday, and we're at the 4th of September, 2019, just after 3:30 p.m. Central Daylight Time. So they reopened the stock indices. This is about where they're going to settle out. Remember, we closed from 315 to 330, then they reopened, and the price is set at 315 as to where the settlement is. Strong day. What was today? A risk-on day. And why's a lot of reasons, questions. You know, it started off with Hong Kong, where the mainland China had decided to remove that extradition bill. I'm not talking shelving it. I'm talking they removed it. So it looks to me like a win for the protesters. The market liked that. It kicked up on the energy markets, I think, in part. The energy markets have been getting a bid in its own as we're seeing trade. But what kind of trade? When I'm looking at the world's PMIs today, they came out a fraction better. I think a lot of people were scared they were going to come out work, and I'm talking the service PMIs, and that helped the market. The metal markets, I'm guessing that gold got a bid off the 55-cent break in the silver market. In the dollar index. In the foreign currency markets, they're fighting on Brexit, but the fight is to not let Boris Johnson just take them out of Brexit. Market likes that for the euro. It got a 60-point rally. This market's gotten a big rally as well. So for whatever reason, come back the first week of after Labor Day, and we're seeming to get what I call risk-on movement into the market as, let's see, the yen down 29.5. If I come over here to the bonds and notes, they're just sort of flubba-dubbing back and forth right now. You didn't get too far in the Bitcoin either. In the gold market for the week, this is the week, we're up $33. That's a powerful move. Whoa. When I come over and you look at how the market's gone these past couple of days, you can see that we're up to that old high. Can we extend through it is the question. We're going to finish out here, like I said, probably in the neighborhood under 1563, but right into those highs. And that's the first time that we're able to break through that. Now, can we stay over it is the big question. When we take a look, you can see that you're over the 18-day average of closes, which is well over the other moving averages, but the resistance is right here, and we keep hitting it and getting thrown back. Now, the first time it hit it back up here was very important to me, and then it fell back through here. And now the question is, if you want to get in the market, what do? Do you start reaching for the market here? Do you wait for pullbacks? That's going to be traders' questions. In terms of momentum, it's overbought. So we have a market that's up to overbought territory. It's having trouble at the upper Bollinger Band, and it's staying over the 18-day average of closes. In GLD, the market went back to the upper Bollinger Band and stayed there. This is going to be where the settlement comes in. In terms of momentum, let's see if this tells us a story. Both numbers of the slow stochastic are over the 80 level. Yesterday, they were both over the 80. Not the day before, but the day before that they were. The day before that and the day before that. What's my point? You can lose one day, like you did here, where they get under. If they recover the next day, it's a sign of what I'll call a trap for the bears, because momentum was shifting. Now the market's here, and if that occurs, and if you can get that momentum run, maybe the Bollinger Band comes into play or a key moving average above you, and what this market decided to do is ultimately get back up there. It's the only way I can describe it. Still very bullish, leading the futures market stronger than the futures market as long as the slow stochastics stay embedded. Now, if they get lost again, say this week, tomorrow's Thursday and Friday, that would be a very bad sign. It would mean that you're losing that momentum the way you did here and back here. In the meantime, twice it's been able to regain and get right back into the embedded reading, which is strong. GDX, higher lows, higher highs, paying solid attention to that upper resistance at the upper Bollinger Band, but an overbought market, not a market that has an embedded situation or came out of one. The The gold-silver ratio is falling off the chart. You know, I was laughing when I said maybe you're going to get down into the 60 level. You're not that far away from it all of a sudden. But this looks like the makings of a massive top had been made, and maybe something historic. You know, people, I get questions. What is the historic relationship? Well, if I went back over all the years, it's probably 30 to 1. It's my guess. I'm not using stats, just trading experience. I'm not saying it's going there, and I'm not saying it's not. I'm saying you're in a run, and this run in silver is a son of a gun. The market did just enough when it came back down, closed under this on Friday, then stuck its head strongly up, kept the embedded reading, and just running right now. Powerhouse, yes, you only stay 5% of the time over an upper Bollinger Band, and this market has been in this higher lows, higher highs. Something else to learn. Look at how the momentum has stayed bullish all this time. It has kept, if you're a momentum studier, you away from the short side of the market, which is not something I think I've talked about at all. The question is it getting ahead of itself? And that's what we all have to worry about. In the copper market, I'm going to take you back here. How many times have I said the first time you hit the Bollinger Bands? Often. The word is not always. Often. That's where the pros take some money off the table. So you came down here, and this was yesterday. All of a sudden, that news out of China comes out today. You're right back to that 18-day average of closes. The pros look like geniuses. If you take out 259.70, and you did that today, the question is, now that you've negated the downtrend, can you mount higher prices up to that 18-day average? Or do we go back into the mentality where, gee, we're really not making headway with China. Their numbers aren't going to be that good. Do we go back into that malaise? Got to wait and see. But you negated a downtrend. 5 days in a row up in the platinum over the upper Bollinger Band. So this is where I often say, you know, I count each day as 1 percentage point. Therefore, I'll stay with what I believe. I would give tomorrow, and this is crazy, the odds close to zero, if not zero, of staying over the upper Bollinger Band. I wouldn't be surprised if you just close under it. That is not a sign of weakness. It depends where you come out of with these. You were in sideways action. So we've had this phenomenal run, and this is a dream run for those in the market, and how do you stay with it? Is it a buy up there? That's not something I teach. When I say that, I don't teach that you go short under a Bollinger Band or over a Bollinger Band. So I'll repeat what I said, and it's in my course. I do not believe you buy over Bollinger Bands or you sell underneath them. I think there's spots in between them that you look at. This is a dramatic move. It is overbought without an embedded reading. In the palladium, it's getting dragged right with the other metal markets, and it's riding the Bollinger Band. Now, today's settlement at 1553 puts the market just over the upper band also. So today it's over it. Yesterday it was over it. And the day before we closed at 1539.20, and that was over the band. So 3 days in a row that we have over it. Are we getting stretched? That's what I'm saying. Does that mean it's the end of a trend? No, that's not what I'm saying. And I'm not saying it's going to continue. We're stretched, and that's where I answer it. In the dollar index, it's almost like when you get to a dollar index and you're up and over it, remember how things work. How often do you stay over that? How often do you stay under it when you go back and you look at the other plays in it? Certain markets act better than others with Bollinger Bands, but at the end of the day, the rule comes in to 5% of the time over and above. Am I right when I say each one of those percentage points, consecutive days over, for example, are one of those? That's what I use. It's a guidance. Am I trying to be a bear? No, I'm saying that it's not time to be a buyer. There's a huge difference between what I'm saying there, and then you walk into corrections. Now that the question is, you're overbought, correcting. Support might be that 18-day average. That's what I'm looking for, but it doesn't have to go there. It wasn't embedded. More times when you're embedded, it loses it. But the dollar index doesn't embed one way or the other a lot. Also got to pay attention to what markets can and can't do. So I still see a market that can correct a bit here. Maybe, just maybe, the world is saying, you know something? We're going to be better than that typical September that is not so good often for the stock market. I don't know. We'll find out what it all does. You can see where the markets are right here. And one of the things we like to do is present you with ideas. And one of those ideas came from our good friends at Modern Trader magazine, which we're hoping to get back on their feet. But with their permission, we had created with them these PDFs of old copies that they had of great trade ideas. At least I thought so. And this is what the Square of 9. If you're a Gann follower, it's something you want to read. Benefits of relative strength. Well, relative strength is similar to stochastics. They're momentum indexes. What is a money flow index? What are the rules if you're a bottom? What about a top fisher in a market? And how do you optimize stops? They discuss these different parts in the market with great graphics. It's about, I don't know, 15 pages or so. We get this to you as a PDF so you're able to read it, print it if you want, away you go. It's something for your trade library. How do you get it? And it is free. Just give us a call, 866-973-2077. You can also go to our website at any point. You'll see, click here for free offers. You'll see when you do that, all of our different offerings. Choose what you want. And to get to that page, if you're watching me on YouTube, just click up here. It'll take you right there. With that, I'm Ira Epstein. You have a great evening. I'll see you all tomorrow.